We have Kunal Shah, head at Commodities Research from Nirmal Bang, joining us, and we have also G. Chandrasekhar, economist, senior editor and policy commentator. Welcome, gentlemen. As Pallavi exactly set up the context of gold prices rising, my first question to you would be very basic and straightforward. We've always considered gold to be a safe haven asset. I would want to ask, amidst global uncertainties, as Pallavi already highlighted, does this become a safer asset to invest? And Kunal, I'd like to take your view first.
I believe that gold is likely to continue its safe haven status at least for some more years, at least next 3-5 years, because there is no easy alternative available which can be seen as a hedge. So Bitcoin was one of them, but it's just about a few countries investing in Bitcoin and planning to create reserves in Bitcoin. But if you really want to hedge against the uncertainty likely to rise from the rising debt of the US, or the not able to service their debt 2 years, 3 years down the line, or if the inflation again surges. So you don't have any instrument right now available except gold to protect yourself. So gold will continue to play a role of a insurance scheme for a lot of, like we buy term policy. The same role gold is going to play for the financial market participant, for big funds, for HNI investors, for central banks. And I think this is going to continue in years to come also.
Okay, got it. And Mr. Chandrasekhar, what is your view? As you know, Kunal Shah already highlighted that he sees this run to continue for some time. What's your view on gold prices rising? Do you see that it will be able to hold on to this momentum in the long run? Because we live in a scenario where global uncertainties are at an all-time high.
Yeah. I've always considered gold to be a very lucky or fortunate commodity. Okay, that whenever there is an opportunity, whenever gold faces headwinds, gold market faces headwinds, something comes up. Some uncertainty comes up that will propel gold prices higher. This is what we have seen in the last so many years. I've seen 30 years ago gold at $250 an ounce. Okay. And then from there, it's now closer to $3,000. So it's been rising. There is no doubt at all, number one. But this uncertainty that we see at the moment, which actually started 2 or 3 years ago with your Ukraine-Russia conflict, then there's Israel-Hamas conflict, then inflation, rising inflation, high interest rates, all that is actually still continuing. And now you add another factor, another driver, which is the tariffs. A huge uncertainty relating to tariffs proposed by the US, by the Trump administration. For all these have combined to propel gold prices higher and higher, which is accelerated by central bank purchases, etc. The point I want to make is, as gold prices keep rising, the risk of a correction also increases. In my view, currently gold has easily $300 to $400 risk premium. And if the risks were to abate, if there is clarity or peace in between Ukraine and Russia and in the Hamas or Middle East scenario, there is a very strong possibility of a correction. When that will happen, when that peace will break out, when there will be ceasefire, we don't know. We can't bet on a war, okay? But gold, as it keeps rising higher and higher, and currently it's a little shy of 3,000, the risk of correction increases very, very dramatically. This is number one. Number two, what is also important is we are forgetting higher prices destroy physical demand. And we have seen that happen in China, we have seen that happen in India and other emerging markets which are very large consumers of gold. So these levels, in my view, are unsustainable. They will sustain so long as this uncertainty continues, but it will be foolhardy on our part that this uncertainty will continue forever. No, there will be change, uncertainties will. The gravity of the uncertainty will certainly reduce. There's no doubt at all. Gold will have to correct, but we can't time the market. this has to happen, correction has to happen, but it's rather difficult to time the market. This is number one. Number two, there is another question I'm sure will come from you. Is it the right time to buy gold? In my view, people who have bought gold at lower prices, this is the best time for them to sell gold and then book profit. And whatever profit they book, you invest at the current prices. Because the propensity for further rise in gold prices, in my view, from here is extremely limited.
All right, Kunal, coming to you, I do want to get your view on this as well. From a shorter term perspective especially, what are the levels that you're looking at for gold? Do we expect gold prices to sustain around the 3,000 mark, or do we expect some swing from here as well? Do you also hold the view that, the percentage change that we're likely to see going forward in terms of a rise might be limited? What is the view that you'd give to those looking to still invest in gold?
So somebody who wants to invest in gold, I think they should wait. Mr. Trump said today morning only that on Tuesday he's going to talk to Russia. So even Russia cannot withstand this ongoing war, which it has been indulging from last 3 years, and that is definitely taking toll. So Russia would also like to do business freely the way it used to, and I think there has to be a peace going forward, peace talk. I don't know how it's going to progress, but the likelihood of that happening is very high. So in the near term, most of the positive have been factored in the gold prices, and which may lead to some correction, some profit taking. It can go down to the levels of 2,850 to 2,900 again. A correction of $125 if the peace talk materializes can take place. I think those would be again levels to re-enter, because apart from the geopolitical problems, the gold is not at $3,000 just because of the geopolitical problems. Gold is up at $3,000 because of the problem in the US bond market, US debt, and the uncertainty related to the tariff and everything, what's going to happen. So I think central bank, even though US does whatever it does, they are not going to buy US bonds, at least for some more time, until we have Mr. Trump coming up and really talking in globalization favor rather than the multipolarized world. So I believe that those correction would be a great opportunity to again re-enter in a long position in gold, because in order to hedge yourself against the uncertainty which may rise in times to come, you need gold. You need gold because if the dollar crashes by 10-15%, what will happen to gold prices? It is definitely going to go up. So at some point, $2,850, $2,800, these are the levels, where investors should again start rebuilding their position. And near term, the upside may be capped at $3,050. It may not go above $3,050.
Okay, and staying with you, Kunal, I do want to ask you about how domestic sort of factors are expected to influence demand as well going forward. Because of where we're seeing gold prices at, can we expect domestic demand to stay tepid for the time being at least?
Yeah, so now I think again the festive season will start. Okay, the gold buying will come, the marriage season will again start, and I think that is going to create a demand. But the volumes may get affected severely because of the higher prices. The Indian buying pattern Indian buyers may shy away from the market, may buy a lesser tonnage of gold, and that's one of the reason that at higher prices the domestic demand is likely to suffer, not just in India, in most parts of the world, most parts of the Asia. The higher prices will lead to a lower jewelry demand. The volumes may get affected. The sales number may not get affected because of the higher prices, but the volumes are definitely likely to witness hit.
And Mr. Chandrasekhar, I'd like to pose you a question. As a common average investor, if I'm watching you and I need your advice, which form of gold would you recommend right now is the right time to buy. Context being that gold was one of the top performing asset classes in 2024. Plus, gold in the market is available in various forms. We have gold ETFs, we have gold jewelry, then we have bars, we have coins. Now that globe, and as you rightly mentioned, that in the long run, until we have global uncertainties in position, gold prices might elevate further from where they are already at the moment, but they might also come down. So in that context, which form of gold do you recommend as an economist to invest in?
The first point is my disclaimer. I'm not an investor, I'm not a trader, I don't hold any position anywhere in any asset class. This is the first proposition. I'm a student of this market. And my own belief is this is a time actually to sell gold and book profit and reinvest that profit in gold again with the hope that prices will go up further. I am bearish on gold. My belief is gold has a potential to decline up to $2,500, but I will not be able to give you a timeline. Much depends on the way ceasefire breaks out in the Russia-Ukraine scenario and in the Israel-associated scenario. The Houthis are still already being bombed by US forces. Things have to settle down. Things can't continue like this. But a greater uncertainty is the tariff threat which Trump has come up with. Is already imposed tariffs on steel and aluminium, on China, on Mexico, on Canada. That is also creating uncertainty. But more likely, he is actually testing the waters rather than going whole hog to fight with his traditional trading partner. Therefore, this is again an evolving situation. As they say, picture abhi baki hai. It is very difficult to double guess how the markets are going to behave in future. But I am not, from the current levels, I'm not bullish on gold. It is probably time for those who have bought gold at lower prices to actually sell and book their profit.
All right, one last question for you, Kunal, before we can let you guys go. So, given what you've said your views are on gold going forward, at the moment, would you then recommend maybe silver ETFs over gold ETFs?
Silver looks quite promising as compared to gold at this level. So if you look at the gold-silver ratio, that is also in favor of silver. Fundamentals of silver, so the clean energy demand of silver is rising at a double-digit growth rate across the globe. The supply side, if you see, 55% of the silver comes from the secondary mines, and rest of the silver comes from gold and silver mines. So there is no significant supply growth, even though the prices have risen so much. There has been a 5 constant years of deficit. So every year, so if you see, we are doing just a maths, and at the end of 2024, the difference between demand and supply was as high as 200 million ounce. So this is very bullish for silver. I think silver prices will continue to outperform gold going forward from here, and silver has a better potential. I would recommend investors even at this level, you should invest in silver ETF. You are likely to get 15 to 20% return in a matter of 1 year.
Right, right. And Mr. Chandrasekhar, one comment that I would want to get from you is, how do you see, the impact of currency fluctuation, which is basically how rupee fluctuates against the dollar, impacting gold imports and thereby influencing demand in India in the long term?
Yeah. Even if gold prices were to correct on dollar terms in the international market, we in India will not be able to get the full benefit of any fall in international prices, primarily because our currency is getting weaker and weaker, and I'm quite bearish on the rupee. The rupee should probably towards the end of this year go closer to 90. I actually dread thinking about that scenario. But in my view, it's likely to pan out, and therefore, that weaker rupee will make our imports more expensive. And of course, we have a rate of customs duty on import, and therefore, the benefit of any fall in the international dollar price, our consumers will not get in full measure. They will get only a part of that. and therefore there is reason to expect that the domestic market will not correct in a hurry, even if the international market were to show some correction.